What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to talk about how to avoid panic closing a position, right? Obviously, as you see, I'm up 2 grand today or 1800, and I should be up almost four, and I'm not due to panic closing. So I want to talk about how to avoid it and basically like reverse engineer why anyone would ever panic close a position, panic sell a position, etc. So with that being said, let's just get down to the bottom of it. Obviously, if you've been following along, you know that I was in this RGTI position that just went extremely south. And ultimately, I ended up closing it yesterday or 2 days ago. I forget when. I think yesterday. But basically, I closed it at the bottom, right? Obviously, when you pull up the bigger chart on the higher time frame, I mean, you see what happened. I basically sold puts for a 16 strike on this candle. Obviously, this didn't bother me. And then, without further ado, this happened. Shout out the CEO of NVIDIA for saying what he said, manipulating the market, as you can call it. You can say whatever you want. That's just what happens in this, right? In the markets, you really just don't know what tomorrow's going to bring. You don't know what's going on behind the scenes in a company. Obviously, there's a lot that you do know. There's a lot that's public info, but there's a lot that you don't. Now, with that being said, I closed this position, and I guess you can call it a panic. When my strike was at $9.50. Right now it's at 6. So it was 4 contracts, so 300. So now I'd be up, I can't do the math, somewhere between like 1,200 and 2,000 on the day, which would put the account back in the green. Now, with all that being said, yes, I am happy about being up 1,800 on the day. Who knows what the market's going to do right now. But the point I want to get at, right, is why would you ever panic sell a position, right? There only is really one reason, right? And the reason being is that you're uncomfortable with the entry in the first place. This Con L position has cost me more than the RGTI position could possibly cost, right? The RGTI position, I only put 5 or 6K into it in total. So max I could have possibly lost would have been 5 or 6K. And that's only if RGTI went to zero, which, believe me, there was moments where I'm sure some of us thought it was going to go to zero. But the point is, right, is obviously when it comes to selling options, you want to be doing it on stocks that you don't mind holding, and stocks that it would be physically impossible for you to panic sell. Con L, yes, it is a 2x leveraged instrument of Coinbase, but still, my conviction in Coinbase and crypto right now, it's enough for me to be able to withstand the lows. Now, RGTI, it was an impulsive play that I thought was going to be a quick cash grab with premium. So when something like this happened, which it was pretty inevitable looking back at it, obviously hindsight's 2020, but the point is that, it was very easy for me to panic sell. When you reverse engineer the fact that the company doesn't have good revenue, there's really not many good things that going on with this company that we would even know of at the moment. It has been around since 2013, I'll give them that, but when push comes to shove, there was nothing about RGTI that would have made me look myself in the mirror and say, if I had my entire net worth in this position, could I sleep at night? And I think that, listen, obviously we want to diversify, so we don't need to necessarily take everything as serious as, oh, it's my whole net worth. Like, the 2K, 3K that I lost in this position, it's not going to change my life in any way. But with that being said, again, the only way you're going to really panic sell is if you're in a position where you kind of realize, like, what the heck am I doing? I remember a good quote I heard about when it comes to managing your positions is, think about if you weren't in it, right? Like, would you enter at this moment? And if not, then maybe you should consider exiting. Or, maybe you don't want to enter because, you already did enter and you see your take profit coming, which is, of course, a reasonable reason. But the point is, you always want to zoom out, right? You always want to take things from the perspective of not yourself. Because when you're actually the one in the position dealing with a move this bad against you, it's very easy to panic, right? It's very easy to lose your thought process. And ultimately, my plan was to hold this more towards expiration and get a bounce. I actually said it in one of the videos 2 or 3 days ago. And just knowing everything I know about the markets, right? Anytime there's a huge move, there's always going to be some sort of bounce. And these types of bounces are where you want to exit or, in other cases, roll. Obviously, this wasn't a position I would have had any interest in rolling. But like this Con L position right now, which I haven't fully decided what I'm going to do, if we look at it, so 2 days ago, if I wanted to roll, I would have had to roll for a credit only to so obviously, as you guys can see, my current position is, it's at 50. Hold on, sorry, let me go back. So just to show you guys what I'm talking about, right? When we click roll this position, so at this current moment, since the market is bouncing, I can roll all the way down to 45, even 44, and still collect a credit. But 2 days ago, when it was, down here, I would have had to roll to like 49. So I wouldn't have even been able to gain equity on the position. So what that tells you is like, you should never be, especially if something goes against you in the world of option selling, you should pretty much always be either closing or rolling on a bounce. Now, again, when you're in positions where you kind of realize, what the heck am I doing? That is what creates panic. So to reverse engineer panic selling, obviously the first thought process is making sure it's a stock that you're genuinely comfortable being involved in. I know this seems like common sense, but the hard part is like the stocks that you might be comfortable with, the premiums just aren't worth it. And in that case, why would you even sell options, right? Maybe it's to get a better entry. Like again, covered calls, you're going to risk losing $25,000 worth of Apple to make $100. Let's just take a look at it just to see what I'm talking about. If we click trade Apple options, sell call, let's say you have 100 shares of Apple, are you really going to risk losing that 100 shares for $200 or $100? Probably not, right? Now, obviously, earnings season is coming within the next couple weeks, which is going to allow us to be able to trade, strong names that are going to have high IV, and in that case, high premiums. And that made me realize too, like even the earnings strategy is still better than chasing penny stocks, because earnings gives you a little bit of the best of both worlds, because you can trade a stock that you want to be in anyway and get a high premium. But with all that being said, I have this list of leveraged equity ETFs, and even these, in my opinion, a lot of these are still better than a lot of the stocks that I see people chasing, or myself was chasing, right, with an RGTI. Like, am I really going to panic in an NVDL or a TQQQ? Probably not, right? Like when you look at a TQQQ and it's like you got the whole market behind you. Yes, you have a little bit of leverage, but it still is the NASDAQ, or like a SPXL. These are positions where I'd rather take the 3x leverage on this. In the end of the day, right, every trade, every position is a gamble. Even Mark Zuckerberg was on Joe Rogan last week or this week, and he was talking about how Apple hasn't innovated. Now, I know Apple has done a great job at being able to make everyone in America want iPhones, but when push comes to shove in the market, if you're not innovating, like your time is limited. And listen, I'm not sitting here and saying to short Apple by any means, but the point is, it's like, how can you confidently, just speak on behalf of really any company, right? So it's like, in a lot of ways, yeah, a leveraged ETF is going to be safer for the average person than trading a lot of these stocks. Now, yes, Apple, Nvidia, Amazon, these are all stocks that, of course, without leverage, you can pretty much go to sleep at night. Affirm, there's a long list of stocks that should be around forever. But my point is like, we just genuinely don't know. As the general public, we genuinely don't know. And as much as, yes, if I was a betting man, I would say Apple will be around for the rest of my life and be a strong, product. With that being said, though, they really haven't innovated much over the last couple of years. And who's to say there isn't going to be someone else that creates some sort of phone that makes everyone get off Apple? Do I see it happening? No. But the point is like, when you can make an argument against Apple, which is literally the biggest company in the world, where do you think that puts these random stocks, especially the speculative ones? So, yeah, if you're going to sell options, my only advice, truthfully, would be either one, sell options that you genuinely wouldn't mind holding for the rest of your life, because then you'll never really panic sell, right? There'll just never be a reason to, because you already had that mindset of, if I have to hold forever, I will. Or two, just go so small. Like, I definitely went smaller on RGTI, but I should have went even smaller than that, and that's the thing. I don't necessarily regret the position. I regret how I handled it. I regret how there's no regret, right? It's really just learning and making sure you take those lessons with you in the future, right? If I would have went in one contract, I definitely wouldn't have panic sold, because the most I would have been able to lose was, $1,600. So I would have been down $700-800. At this point, I would have been down like maybe $200 or $300. I probably would have exited and called it a day. Now, obviously, when you go small, yes, it is smaller premium, so it makes it a little less exciting. But, you have to be able to see that in that light, right? Like, if you're not going to diversify, or sorry, if you're not going to do indexes, because obviously indexes are diversified, right? Like, if you're doing a TQQQ, diversification isn't really as necessary, because TQQQ is diversified, right? It's an index with a bunch of stocks. So if you're going to be doing individual stocks, you have to be playing it a little smarter. Obviously, Connell, I'm all in right now in terms of this account, but it's also, again, the mindset, right? When I started this account, I sold 20K of my crypto to do this, and my thought process was it would be crypto stock. So it's like, at least if Coinbase or Conl did go to zero, at least it's like, at least I died by the sword, right? Like where RGTI was a stock I didn't know much about. I saw hype about it on Twitter, Reddit, X, people talking about it in the Discord. In the end of the day, that's not a stock I was willing to live or die by. And ultimately, that's what created the panic sell. So I hope this video taught you guys a lot. I hope you guys were able to learn how to avoid panic selling. Real quick, I'll just pull up and show you guys the Discord. And just to show you guys, it's funny, like I'm able to, dish it. As I said, as someone who's able to dish it, you got to be willing to take it. And someone said RGI is going up because Jerry closed his position. It's just funny, right? Like I don't mind. I'm always here for the humor. I love the community. I love interacting with everyone. So if you want to be a part of that, if you want to communicate with me and all these other option sellers, which I think right now we have 180, make sure to join. The link is in the description. I hope you guys got a lot from this video. I hope you were able to have some gains today like I was. I hope it was a green day for you, and I'll see you in the next video.